Hello students. So today we are into direct taxation, which almost form 50% of direct and indirect taxation subject. So it is very important from your exam point of view. Now let's take a look at our official study module and try to understand the chapter wise weightage, which will help you to prepare smartly for the exam. Now from basic of income tax act almost 50%, and from heads of income 25%, and from total income 50%, which all together form 50%. Now based on the recent question paper trend, here is a common pattern I have observed. That is, question 2A is always from residential status or from capital or revenue receipts or from agriculture income. Now coming to module 2, 2B generally covers salary, and 3A from house property, and 3B from PGBP, and 4A from capital gain, and 4B from income from other source. And 5A is typically a question to compute total income. Okay, 5A is to compute total income, and 5B can come from these three chapters, that is clubbing, set of deductions. And from 3.4 to 3.9 generally comes for MCQ. So don't spend too much time going deep into these topics for descriptive answers. Instead, just focus on practicing MCQs from this section. That will be more than enough. And this trend I have noticed consistently in every exams and in model question paper. So it's a smart move to prepare accordingly. Okay, remember, smart study is always better than hard study. Okay, 2A from capital or revenue receipt or from residential status or from agriculture income, and 2B will be from salary, and 3A will be from house property, and 3B will be from PGBP, 4A will be from capital gain, and 4B will be from income from other source, and 5A for computation of total income, and 5B from this part 3.1 to 3.3. I will show you a question paper. Okay, this is the June 2025 question paper, the latest one. Okay, as you can see, the same trend that I just explained is followed here too. First 15 questions will be MCQs, okay, which carry 2 marks. So total 15 into 2, 30 marks for MCQs. And 2A is from residential status. Okay, and 2B from salary, and 3A from house property, and 3B PGBP, and 4A from capital gain, and 4B from other source, income from other source, and 5A from for computation of gross total income, and 5B for computation of total income. Okay, so this is a question paper pattern. This trend has been followed for many attempts. Okay, you can just refer other question paper too. Alright, now let's begin with our first chapter in direct taxation. Today we will start with introduction to income tax and then move on to the very important topic, residential status. Okay, this is our first class, so make sure you follow along carefully. I will explain everything from the basics, so even if you are new to the subject, you will understand it very easily. And one more thing, if you want the notes, you can join my Telegram or WhatsApp group. The links are available in description. So now, what is tax? What is tax? It is a revenue to the government, which is mandatory payment. Citizens have to pay the tax, and it is charged on income. Okay, tax is charged on income of an individual. Okay, it is a duty of the citizen to pay the tax, and also it is an obligation to the citizen. So tax, which is a compulsory payment that every citizen has to give to the government. Okay, and it is not optional. You must pay if you meet certain rules and certain regulations. Okay, tax is usually charged on your income. It is usually charged on your income or property or things you buy. Okay, now the main purpose of tax is to help the government to earn money. This money is then used for what? For the purpose of building roads, schools, hospitals and defense, etc. Now tax is collected because the law says it is legally enforced. Okay, it is a legislative authority. So in short, tax is mandatory payment which is collected by the government from the citizen. Okay, government is collected from the citizens to run the country and provide public service. Okay, so there are two main types of tax. Okay, direct and indirect taxation. Now direct tax, this is the tax which is paid directly to the government. Okay, by the person who earns the income. Who earns the income, they pay directly tax to the government. Okay, the example of direct tax is income tax. Okay, and which is tax on income or profit or on wealth. Okay, this direct tax is paid on income or on profit or on wealth, and you cannot pass the burden to some other people. Burden is on the same person. The burden of tax is on the same person who pays it. Okay, and both the incidence and impact is on the same person, which means who should pay and who actually pays is same. Okay, and it is usually progressive in nature. Progressive means the more you earn, the more you have to pay the tax. Okay, and example, if you earn 10 lakh rupees a year, you have to pay income tax directly to the government on 10 lakh. Okay, and coming to the indirect tax which is collected by the sellers. Okay, sellers, but the final payment comes from consumers. Example what? GST. Okay, GST, goods and service tax, and it is tax on goods and service. The person selling the product collect the tax from the customer and pays it to the government. Okay, the seller will collect the tax and pays to the government. Okay, and the burden of the tax is on someone else. Okay, not the same person who is paid. Here seller is collecting the tax, but actually the burden is on the customer, so burden is on different person. Now the incident and impact is on two different persons. Okay, it is usually regressive in nature. Regressive in nature means if you are rich or poor, the same tax rate is applicable to all. Okay, example, you buy a mobile phone for 10,000 and you have to pay 18% GST, and the shopkeeper collects 1,800 rupees as tax, as GST, and pays to government. Okay, so this is the main difference between direct tax and indirect tax, which is very important for theory 7 marks. Okay, so now let's talk about the constitutional provision. So Article 265 of Indian Constitution clearly says that no tax can be levied or collected unless there is an authority of law. Okay, no tax can be levied or collected unless there is an authority of law. That is, the government cannot charge or collect any tax unless there is a proper law passed by parliament. Okay, tax cannot be charged randomly or without any legal approval. There must be a valid law and it should be strictly followed. So the government can only collect tax if the law allows it. Okay, and example, let's say government suddenly tell us to pay social tax, but there is no law passed about it, then you don't have to pay it because it is not legal. Okay, the government must first pass a law in parliament to make it valid. Okay, now Article 246 and Schedule 7, the Constitution is divides law making power. The Constitution divides law making power between central and state using 3 lists. Okay, union list, state list, and concurrent list. And the article number is all important for 1 mark question. Okay, MCQs. And first one, union list, that is list 1, which is central government. Only it contains the matter on which law can be made exclusively by central government. That is, only the central government can charge the income tax on salary or on business profit. Okay, like central government has the power on tax on income except agriculture income. Okay, agriculture income. Now coming to the second one, list 2. It contains the matter on which law can be made exclusively by state government. Only the state government can make laws on the matter in the list. That is, it includes agricultural income. Okay. Now coming to the third one, concurrent list. Both the central matters on which can jointly made by the central and state government. Both the central government and state government can make laws on the subject. Like if they clash, or if there is any conflict between central and state government, the central government law will be followed. Okay, central government will be given priority. Now coming to Article 245, central government has the power to make a law for whole or any part of the India, and state government has the power to make a law for whole or any part of the state. Okay. Now sources of income tax law or components. There are 5 main sources that together form the income tax system in India. Okay. Now in first one is Income Tax Act 1961, which is the main provision of law. Main provision of law means this is the main book of law. Okay, all the tax, all the rules and legal provisions are written here, and it tells us what is taxable and how to pay the tax and how much we have to pay and who has to pay. Okay, everything is written in main provision of law. And next one is Income Tax Rule 1962, which is supporting to the main law. These are the instruction on how to follow the act. Okay, these are the instructions to how to follow the main provision of law. Okay, now which is issued by CBDT. CBDT means Central Board of Direct Taxation. Okay, now coming to third one, Finance Act. Every year the government announces the budget. Okay, the budget includes, and this budget includes a finance bill, and after passing in Lok Sabha and Raj Sabha and getting President's approval, it becomes Finance Act. Okay, now every year government announce what? Budget. Okay, and this budget include finance bill, and after passing it in Lok Sabha and Raj Sabha and getting the approval of President, it becomes what? Finance Act. Okay, this finance bill will be presented in Lok Sabha and Raj Sabha, and it must be approved by the President, so it becomes Finance Act. This make changes to the Income Tax Act like new tax slabs, deductions, exemptions, etc. For your exam, Finance Act 2024 is applicable, whether it is December 2025 or June 2025. But since the June 2025 exam is already over, now you just need to focus on December 2025, and for that also Finance 2024 is applicable. Okay. Next one, notifications or circular. The CBDT is the authority that helps to implement the Income Tax Act. Okay. Sometimes the law may not be fully clear, or there might be a practical confusion. Okay. So in that case, the CBDT issues what? Circulars to explain how a particular provision should be applied. So notifications are used to make small changes or give exemptions or provide additional details. So these are not law by themselves. They are just to help in correct or for interpretation or for implementation of Income Tax Act or laws. So it is to explain how particular provisions is applied. Okay. Next one is judicial decision or case law. So sometimes the Income Tax Act is not clear, or people don't agree on what a certain section means. That is, for example, a taxpayer might says that this income is not taxable. Okay, but the income tax officer might says that no, this income is taxable. Okay, so taxpayer says that this income is not taxable, and the income tax officer says that this income is taxable. So there is a disagreement and there is a conflict between the taxpayer and income tax department. In such case, the matter goes to the court. Okay, the court studies the law, listen to both sides, and then gives a final decision. That decision become a case law. Okay, that decision become a case law. In future, if similar situation comes up, we follows this court decision as an example. Okay, and let's say an example. If there is a person who gets a money as a gift from his uncle, okay, he got money as gift from whom? His uncle. Now the law says that gifts are taxable, but only if they are from relatives. Okay, gifts are taxable only if they are from non-relatives. Okay, gifts are not taxable from the relatives, but gifts are taxable if they are from non-relatives. Okay, if they are not relatives. And but the income tax officer says that uncle is not a close relative as per law. Okay, as per law, uncle is not a close relative, so you have to tax on that. But the taxpayer says that no, uncle is my blood relative and this is a genuine gift. So the case goes to the court, and now court checks the law and says yes, as per the law, uncle is not listed as relative, so the gift is taxable. So this decision becomes a case law, and in future if someone else gets a gift from uncle, the officer will follow this case law and tax it. Okay, now listen. In a normal year, we have only one budget. Okay, we have only one budget that comes in February. The finance bill is passed in that budget and it becomes Finance Act. Now, but in an election year, okay, in an election year, there are two budgets. First, a temporary budget is passed. Okay, first a temporary budget is passed, which is vote on account, just to manage the basic expense till the elections are over. And after the elections, when the new government comes, they present the full budget. So in the election years, there are two budget instead of one budget. Okay, we only have one budget, that which comes in February in normal year, but in the election year there will be two budgets. Okay, so the next topic is, what is income? Income means any money or benefit you receive, whether it is in cash or kind or even through a benefit that has a value. Now income can come from many different sources. Okay, that is either from salary, rent from house property, business profit, capital gain, that is from sale of shares or property. Okay, or from gift, lottery or gambling, or from pension, interest, dividend, as commission or scholarship, even illegal stuffs like smuggling, robbery, theft. So basically anything that comes in is received or has a value, we call that as a receipt. But wait, not all receipts are income. Okay, so just because you receive something, it doesn't mean it is always taxable income. That's why we divide into two categories: capital receipts and revenue receipts. These capital receipts means these are the amount that comes once in a while or related to the assets, like money received from selling a lands or shares, or loans taken, or you have received compensation for any damage. Okay, So capital receipts are mostly non-recurring. Non-recurring mean which doesn't happen again and again. So are they income? No. They are the capital receipts are usually not treated as income unless the law specifically says that. Okay. Now, capital receipts are normally not treated as an income unless it is specifically included. Okay. Now coming to revenue receipts, these are regular incomes you get in normal course of business or life. So example, we can say salary, rent, business income, interest, commission, etc. Okay. Now normally revenue receipts are income unless specifically excluded. Okay, it is no revenue receipts are income. Okay, unless it is specifically excluded. Okay, here capital receipts are normally not treated as income unless it is specifically included. Okay, revenue receipts are recurring, it happens again and again, whereas capital receipts are non-recurring. So we can say that revenue receipts are normally treated as income unless the law specifically gives exemption. Okay. Next is sources of income and heads of income. We can earn income from many different sources. Okay, different sources in life, like salary from job, rent from house property, profit from the business, interest on savings, you receive gift, lottery, dividend, etc. Right? These are all sources, the place from where we earn income. And what are heads of income? Now, to make taxation simple, the Income Tax Act divide all this source of income into 5 categories, which are called as heads of income. And there are 5 heads of income: income from salary, income received from employer, like we get basic salary, bonus, house rent allowance, etc. Okay. And the next is income from house property, which means rent received from building or a land. Okay. And next is income from business or profession, which means income from doing business or from being self-employed, like profession like doctor. Okay. Now income from capital gain, which means profit earned by selling any property or shares or land, etc. Okay. Now come to income, last head, income from other source. All other income which is not covered under this 4 head will be included in the income from other source, like lottery, dividend, gift, commission, etc. Okay. And why do we study this? Okay, what do we do in the income tax? Because income tax we have to compute total income and we have to calculate the tax liability based on this total income. Okay, so first of all we have to classify all the incomes under these 5 head and compute the total income, and then we will calculate tax liability, how much we have to pay to the government based on the total income. Okay, now you can see the format. First we have to compute income from salary, and then income from house property, business or profession, capital gain, and income from other source. Add all this together, we will get gross total income and less deduction under chapter 6A. That is, there are so many deductions, we will study later, and then we will get total income. Okay, after reduction you will get total income. So we earn income from many sources, but for tax we divide them into 5 heads and we calculate income under each head and add them to get gross total income. and then we subtract deductions, and then on this total income we will calculate the tax liability. Okay, on this total income we will calculate the tax liability. Now section for charging section of income tax. Okay, remember the section for charging section of income tax. Income tax is charged for every assessment year on every person on the total income earned by such person in the previous year at a rate prescribed in the Finance Act. So it tells us that income tax is charged on every person. Okay, charged on every person for every assessment year based on the total income earned in the previous year, and the tax is calculated at the rate which is mentioned in the Finance Act, which for your exam is Finance Act 2024. Now let's understand what is previous year and what is assessment year. Previous year is the year in which income is earned. So our previous year is, for the exam purpose, your previous year is 2024-25, assessment year is 2025-26. Okay. Example, if you earn income between 1st April 2023 to 31st March 2024, that is, if you earn any income between 1st April 2023 to 31st March 2024, you have to pay the tax on which year? You have to pay the tax which you have earned on 1st April 2023 to 31st March 2024 on 1st April 2024 to 31st March 2024. So we can conclude that if you earn any income on the previous year, you have to pay the tax on the assessment year. Okay, if you earned the income on 2022-23, you have to pay the tax on 2023-24. Okay, so for the exam purpose, 2024-25 is your previous year and 2025-26 is your assessment year. So if you earn any income on 2024-25, you have to pay the tax on 2025-26. So the year in which tax is paid, and the previous year is the year in which the income is earned. Okay. Normally previous year is the period of 12 months. Okay. Previous year is the period of 12 months, that is 1st April to 31st March, that is 12 months, right? Now, however, in following two cases, it can be period less than 12 months. Okay. A new business or profession, where a new business or profession is set up in the middle of the year. That is, if a person starts a new business or profession during the year, say on 1st August, that is, the previous year will start from 1st August to 31st March, which is less than 12 months. Only applicable to these two cases. Okay. And the second one is where a new source of income is generated. If someone starts earning from a new source in between a year, like suddenly start earning a rent or gets a new job, then previous year for that source also begins from the date starts till 31st March. So we can say that section 4 says taxes charged on every assessment year on total income earned in the previous year at the rate given in the Finance Act. And previous year is the income which income is earned, and assessment year is the year when the income is taxed. Normally previous year is 12 months, But if someone start a business or new income is generated in between, then it can be less than 12 months. Okay. Now the next is section 231. Who is a person in income tax? Students, when section 4 says income tax is charged on every person, so we need to understand who is exactly a person is. So for that we go to section 231 of the Income Tax Act. This section gives us the legal meaning of the word person. Now don't get scared, it is just a list of who all can be taxed. Let me tell you in simple words. The word person includes individual, HUF, firm, company, AOP, local authority, artificial, judicial person. And just understand that under income tax, person doesn't only mean human being. It includes group of companies, families, and even trust, government bodies. Whoever earn income, they are treated as a person and taxed accordingly. You don't have to by heart all these categories, just go through them and understand who comes under the definition of person. Okay, next topic is assessee. Who is an assessee? Any person liable to pay tax or any other sum under this act, under the Income Tax Act, is known as assessee. A person who earns income and files returns or pays tax on their own income, they are known as assessee. Assessees include three types: representative assessee, deemed assessee, assessee in default. Representative assessee means sometimes a person is not able to manage their own tax matters, so someone else is made responsible to file or to pay tax on their behalf. Example, a guardian filing tax for the minor child. Okay, so they are known as representative assessee. Now coming to deemed assessee, when a person dies or business is closed but still tax has to be paid, so then the legal heir or the receiver becomes responsible, and they are not the one who earned the income, but the law treat them as a assessee. Okay, so they are deemed assessee means treated as assessee by the law. Okay, they are not actual the person who need to pay the tax, they are treated as assessee by the law. Okay, now assessee in default. If someone does not follow the rules like not paying tax, not deducting TDS, not filing return, they are called assessee in default. Okay, now let's talk about the tax rate. There are two type of tax rates you need to know. That is, one is general tax rate and other is special tax rate. General tax rate we called as slab rate. This is the normal tax rate and it is applicable to most regular incomes. It means if your income increases, the tax also increases step by step based on slabs. Okay, and these slabs are given every year in the Finance Act and the tax is calculated accordingly. So the income taxed under the slab rate is salary, rent, interest, income from business or profession, dividend, etc. And so all these are general incomes and it is taxed under the normal slab rate. Okay, you can see the slab rate like up to 2.5 lakh nothing is taxable, and more than 2.5 to 5 lakh 5%. This is the slab rate. Okay, now coming to now special tax rate, that is special tax rates are applicable to some special incomes. Which all are special income? Long term capital gain under section 112 12.5. Okay, long term capital gain under section 112A 12.5 in excess of rupees 12,500, and short term capital gain under section 1A, casual income 30%, online money gain 30%, undisclosed income 60%. So now just remember there are two types of slab rate, that is two types of tax rates, that is one is slab rate and special rate. You only need to learn which income come under special rate. Once you do all the chapters, you will understand why and how these rates are applied. Okay, for now you just study that there are two types of tax rate, general and special tax rate. Okay, now let's understand what is general tax slab rate. Okay, we already saw that normal income like salary, rent, business income, interest, dividend is taxed under something called general tax rate, which means slab rate. Okay, now what is slab? Slab means step by step. As your income increase, your tax also increase in steps. That is called slab system. And the slabs are not the same for everyone. They are based on age. So we divided into three groups. Okay, like individual, senior citizen, super senior citizens. People below 60 years, that is normal individuals, they are up to 2.5 lakh, nothing is taxable, and more than 2.5 to 5 lakh 5%, and 5 lakh to 10 lakh 20%, more than 10 lakh 30%. Okay, and for senior citizen, that is resident individual aged above 60 years but below 80 years. Okay, 80 years up to 3 lakh nothing is taxable. Okay, and more than 3 lakh to 5 lakh 5%, and more than 5 lakh to 10 20%, and more than 10 lakh 30%. You have to by heart this percentage. Okay, and above 80 years up to 5 lakh nothing is taxable, and more than 5 lakh to 10 lakh 20%, and more than 10 lakh 30% is taxable. Now the general tax rate or slab rate is like steps. More income, more tax, and it depends on your age. Younger people get exemption of 2.5 lakh. Okay, they don't have to pay tax up to 2.5 lakh. Okay, and for senior citizen up to 3 lakh, and for super senior citizen up to 5 lakh is tax free. After that, tax increase by step by step. Okay. Okay, now let's take one example to understand how slab rate work. Suppose Arun. Okay, Arun is 30 years old and he earns rupees 8 lakh in a year. So general tax rate will apply, which means he is below 60 years, which means the first 2,50,000 of the income is totally tax free. There is no tax on that. After that, next 2,50,000, that is up to 2.5 lakh, no tax, nil. Okay, out of 8 lakh, first 2,50,000 is not taxable, nil. Okay, then after that 2,50,000 to 5 lakh will be taxed 5%, which is, what is the difference between 2,50,000 and 5 lakh? 2,50,000, right? So for the next 2,50,000, the percentage is 5%. Okay, now what is the amount? 2,50,000 into 5% is 12,500. So now total it is 5 lakh. Next is, now from 5 lakh to 8 lakh, it is 20%. The difference is how much? 5 lakh to 8 lakh. The difference is 3 lakh. Okay, so the next 3 lakh, Next 3 lakh is of 20%, which is 60,000. So total 72,500. Okay. So total his income is 2,50,000. Okay, you have to calculate in step by step. First 2,50,000 no tax, nil, and next 2,50,000 5%. That is 12,500. And so remaining how much out of 8 lakh? 5 lakh is already taxed, and now the remaining is 3 lakh. For 3 lakh 20%. Okay, the difference between 5 lakh and 8 lakh is 3 lakh, so 20%, and it is 60,000 and total 72,500. So remember that tax is not charged on the full amount directly. It is charged step by step in parts. That's what we call slab rate, and we apply it in steps, not on the full income at once. Okay. Students usually thinks that why are we dividing the income into slabs? Why can't we apply that whole 8 lakh into 20%? Because 5 lakh to 8 lakh it is 20%, right? So why can't we apply the whole 8 lakh into 20%? No, we cannot do that. That is the biggest mistakes the students do. We don't apply one flat rate on that whole income. We apply different tax rate on different portions of your income. So that's why it is called as slab system, like step on staircase. Okay, so if your income is 8 lakh, we have to apply first 2.5 lakh 0%, and next 2.5 lakh 5%, and on the remaining 20%. Okay, if your income is like 15 lakh, first 2.5 nil, next 2.5 5%, and more than 5 to 10, right? For 5 to 10 5 lakh. Okay, now out of 15 lakh 5 lakh we already calculated, and remaining there is 10 lakh, right? 5 lakh to 10 lakh how much? 20%. So next 5 lakh 20%, and what is remaining? The remaining is 5 lakh. For next 5 lakh 30%. Okay, this is how slab system works. You will understand once we start doing the problem. Let's do some question. Mr. Dilip, aged 21 years, his total income is 15 lakh. So this is the tax rate. Okay, now his income is 15 lakh up to 2.5 lakh, no tax. Okay, 2.5 to 5 lakh, that is the difference is 2.5. So total it is 15 lakh, and up to 2,50,000 it is nil. Okay, and next 2.5 to 5 lakh. So next 2.5 to 5 lakh means the difference is 2.5 into percentage 5%. So the answer is 12,500. So next 12,50,000, and next 2,50,000 is 5%, then 10 lakh is remaining. So next 5 lakh to 10 lakh. So what is the difference? 5 lakh. So 5 lakh. Now 5 lakh is remaining. Okay, so next 5 lakh 20%, that is 1 lakh, and it is more than 10 lakh, right? It is 15 lakh. So up to 10 lakh it is 1 lakh plus 12,500, total 112,500. And more than 10 lakh, how much is there? 5 lakh. So 5 lakh into 30%, which is 1,50,000. Okay. So total it is 22,62,500. Okay. Now after that, after it is the tax liability. It is the tax amount which we have to pay to the government. And after that you can add surcharge, and it is a format. Okay. Add surcharge and add health and education cess. Okay. It is always, health and education cess is always 4%. Okay. Here there is no surcharge. So add health and education cess, that is 2,62,500 into 4%, 10,500. So total amount is 2,73,000. So you can see here total income is 15 lakh. Out of that 2,50,000 no tax, and 2.5 to 5 lakh, the difference is 2,50,000 into 5%, that is 12,500. That is 5 lakh to 10 lakh. It is 5 lakh into 20%, which is 1 lakh, and more than 10 lakh it is 5 lakh, right? So 5 lakh into 30%, which is 1,50,000. So total amount is 2,62,500, and you can add surcharge. So after getting the total income, we add surcharge, and also we add health and education cess, right? So surcharge is applicable if total income is more than 50 lakh. Okay. Here his income is only 15 lakh. The surcharge is only applicable if his total income is 50 lakh. If it is more than 50 lakh, surcharge is applicable. If it is more than 50 lakh, up to 1 crore, 10% on tax. Okay. 10% on tax means, on tax, here the tax is 2,62,500. If his income is more than 50 lakh, we have to calculate on the tax into surcharge percentage. Okay. Now if his income is more than 50 lakh up to 1 crore, it is 10%, and if his total income is more than 1 crore up to 2 crore, 50% on tax, and if total income is more than 2 crore up to 5 crore, 24% on tax, and if it is more than 5 crore, it is 35% on tax. Okay. And here health and education says always 4% on tax after adding surcharge. Okay. First you have to calculate tax liability and add surcharge. Surcharge is only applicable if his total income is more than 50 lakh. Here in this case his total income is only 15 lakh. That's why no surcharge. So after that you have to add health and education cess, which is fixed, which is 4%. And after that you will get net tax liability. Okay. So let's see the next question. Mr. Dilip, 32 years, his total income is 26 lakhs. Okay. Now the same method, first 2.5 no tax, 2.5 to 5 lakh, 5%. You can do it in your own. And here also no surcharge because his income is less than 50 lakh. Okay. And next is 81 years. 81 years means super senior citizen, and up to 5 lakh no tax. Okay. And remaining all the same method. Okay. And next is 62 years old. 62 years means senior citizen, up to 3 lakh no tax. Okay. And all this is same. And next is rebate under section 87A. Rebate is a discount or a concession or a relief which is given to resident individual. Okay, will we study who is resident later. If his total income is up to 5 lakh. Example, if Arun has 5 lakh, total income is 5 lakh. Okay, up to 2.5 lakh, there is no tax, right? So example, I will say with the example, if his total income is 4 lakh, okay, up to 2.5 lakh, no tax, and more than 2.52, his income is total 4 lakh, right? So up to 2,50,000, up to 2,50,000, no tax. Then the remaining is 1,50,000, right? Okay. So 1,50,000 into 5%, which means 7,500. So the total tax liability is 7,500, and his income is less than 5 lakh, right? His total income is how much? 4 lakh only. So his income is also less than 5 lakh. Then he will get a concession, a discount, okay, which is known as rebate. Rebate under section 87A. Whichever is lower, he will get that. Tax amount or the limit, it is fixed, 12,500, or the tax liability. Here the tax liability is how much? 7,500. Whichever is less. Here 7,500 is lower, so you have to pay any tax. Okay, so the thing is that if his total income is less than 5 lakh, he will get a discount or a concession. Okay, the condition is that tax amount or the limit, whichever is lower, he will get the concession. Here the tax amount is 7,500, so he will get the concession of 7,500. So he does not have to pay any tax. Okay, this is about the rebate. Now one more thing, rebate is a discount. Okay, rebate is a discount or a concession given to the people whose income is less than 5 lakh, whereas surcharge is tax on tax. Okay, it is added to the tax liability. This extra tax you have to pay if your income is more than 15 lakh. Okay, surcharge is additional tax, whereas rebate is a concession. Okay, rebate is a concession or a discount whose income is below 5 lakh. Okay, now we have studied about surcharge, which is additional tax, which is tax on tax. Okay, and we have studied about health and education cess, which is 4% fixed, and also we have studied about rebate under section 87A, which is discount or concession or relief, and it is only applicable if his total income is less than 5 lakh, and surcharge is only applicable if it is more than 50 lakh. Okay, now the next thing is marginal relief. Marginal relief is applicable only when your income is slightly or marginally more than the income on which surcharge is applicable. Concept of marginal relief will be applicable for all types of person if their total income is slightly more than the surcharge limit. Okay, now let's look to the surcharge limit. We know that if our total income is more than 50 lakh, surcharge is applicable. So up to 50 lakh to 1 crore, 10% on tax. Okay, and if it is more than 1 crore up to 2 crore, 15% on tax, and 2 crore and up to 5 crore, 25% on tax, and more than 5 crore, 37% on tax. Let's say an example. Now let's take two cases. For Ramu, okay, for Ramu, his income is 50 lakh, and for Sida, her income is 50 lakh 10,000. Okay, so first we have to compute what? First we have to compute the tax liability. So according to the slab rate, we have computed the tax liability up to 2.5 lakh, no tax. Like that we have calculated and we got the tax liability. Okay, tax liability. For Sida, the tax liability is 13,15,500 and for Ramu, the tax liability is 13,12,500. Okay, so next thing we had to add surcharge. Okay, so surcharge is only applicable to whom? Where his or her income is more than 50 lakh. In this case, Ramu is not applicable because his income is up to 50 lakh. If it is more than 50 lakh, it is applicable. So, in case of C, the surcharge is applicable. And in this case, surcharge is more than 50 lakh to 1 crore. The percentage is 10%, right? You have to by heart the percentage, okay? So, we have to add 10% extra. So, Sita has to give extra 10% tax. So, we have to calculate on the tax liability 10%. So, she have to give extra 1,31,550, where Ramu have no surcharge. Okay. Now, the thing is that there is a slight increase. There is only a slight increase in the income. That is, Ramu has 50 lakh and Sida has 50 lakh 10,000. There is only a difference of 10,000, which make her to give an additional tax of rupees how much? 1,31,550 for additional 10,000, which is more than her total income and which is unfair. Okay, so the government give them marginal relief. So marginal relief means what? Your extra tax should not be more than your extra income. Okay, your extra tax which is surcharge, which should not be more than your extra income. So in this case, what we will do is, so we can calculate the marginal relief by how much there is an increase in tax. 13,1250, right? And what is the increase in income? 10,000, right? So by deducting, we will be getting 121250. That much tax will be reduced. Okay, this is our marginal relief. So how can we calculate the marginal relief? Increase in tax. How much tax is increased? And from that, deduct increase in income. You will be getting marginal relief. So after adding the surcharge, you can less marginal relief, and from that amount you can add health and educational cess. You will get net tax liability. Okay. Now based on that, you can do all other questions, and if you have any doubt, you can message me. Okay. So the next thing is new tax regime. That means default tax regime, section 115 BAC. Okay. Now listen carefully. Till now we have studied the normal way of calculating tax. That method is called as old tax regime. Now the government has introduced another method called new tax regime, and it comes under the section 115 BAC. So from now we have two systems for calculating income tax. One is old tax regime and the other is new tax regime. From the latest rule, the new regime is default. That means if you don't choose anything, the tax will be calculated using new tax regime. Okay, but in exams, both regimes are important, and in question paper they will clearly mention which regime you should use. Sometimes they will ask you to calculate under both regimes, and sometimes only under one. Now, important point where students usually makes mistakes. So listen carefully. if the question says opted out of section 115 BAC, which means they are using old tax regime. Okay, opted out of section 115 BAC. But if the question says opted, okay, but if the question says opted section 115 BAC, that means they are using new tax itself. Okay, just one word, that is opted and opted out, can completely change your method of calculation. So be very careful, read the question properly and pick the right regime. The tax calculation method is same for both old and new tax regime. The difference is that the rates are different, slightly different in both. Okay, now under new tax regime, the method of calculating tax is same. Income is given, we apply the slab rates to calculate the tax. But the difference is that slab rates are different. In new regime, the government has given low percentage slab rate. Okay, up to 3 lakh, no tax. Up to 3 lakh to 7 lakh, 5%. Up to 7 lakh to 10 lakh, 10%. More than 10 lakh to 12 lakh, 15%. More than 12 lakh to 15 lakh, 20%. And more than 50 lakh, 30%. Okay, and in case of surcharge, the difference is if the total income is more, that all is same. If the total income is more than 50 lakh, and the thing is that the change in the surcharges, the last 37% surcharge is not applicable in the new tax or default tax regime. Okay, health and education cess is same, and rebate also the changes. Here the total income is up to 7 lakh. Okay, in the new tax regime it is 7 lakh, but in old tax it is up to 5 lakh. Okay, the difference. And here the condition is 25,000. Okay, amount limit is 25,000, and in old tax it is 12,500. 12,500, and in new tax it is 25,000. Okay students, with this we have completed the introduction chapter of direct taxation. Now you can start practicing the question from your module, and also from the PDF I have shared with you. If you face any doubt while solving, you can message me directly. Thank you for attending today's class. We will be uploading the next topic, residential status, very soon. So stay tuned and make sure to revise what we have done so far. Thank you once again and happy learning.